Got Henry McVey. He's the Chief Investment Officer of Balance Sheet at KKR. And Henry, welcome.
It's great to be here. Good morning.
Let's talk first the markets. Dow closing above 40,000. Questions about what the Fed's going to do. You're convinced that the Fed is not going to cut rates this year. Why is that?
That's our base case. I mean, we have 24 offices around the world. We have over 150 portfolio companies. And when we look across our enterprise, we still see pretty good growth. The second thing is just bigger picture. Our theme at KKR has been this idea that we're in a regime change, that the world is changing where there's going to be a higher resting heart rate for inflation, more fiscal stimulus, more geopolitics, messy energy transition, and sticky wages. And with that, the Fed probably doesn't need to cut this year. So if they do, it'll be late in the year. We do see them cutting in 25, but when you look at the services inflation that came out, it's still north of 5%. And so will it trend down? Yes, but I'm not sure they need to rush to cut. And when you look at the corporate profit outlook, companies are doing okay in a 5% interest rate environment.
So what's that mean for the markets? If they don't cut rates, but they don't do it because of a strong economy, can the market hang in?
Our thesis has been kind of glass half full. You could look around the world and say there's a lot of bad stuff. I mean, you guys have been talking about some of it this morning. The offset of that is there's a fair amount of CapEx spending. Consumers are keeping their jobs much better this cycle, and growth is going to be okay. So, The other thing that, we don't do technical analysis at KKR, but when we look at our world, we don't see a lot of supply. When you look at IPOs, high yield and levered loan issuance, it's as low as it has been since 2008 and 2001.
And there's a lot of liquidity that has to go somewhere?
Yeah, and so what's happening, and then at the same time, S&P is buying back $1 trillion of stock. I was in Europe last Monday and Tuesday. They're buying back almost $400 billion of stock, which they typically don't do. And so there's some real technicals that are keeping the market stronger.
But if you think we are in a new regime where inflation levels are just going to be higher around the globe, what is that eventually lead to stagflation? What do we do about that?
I don't. This is where, when Chairman Powell talked about the stag and the growth, to me, we are getting really strong productivity. This reminds me a lot of the 1990s. I wasn't around for the 60s, but if you look at those 2 decades, you have really strong productivity growth. Right now, we're seeing a surge in productivity. It's not AI driven. It's driven by the CapEx that we saw during COVID, and that's led to more corporate profitability efficiency.
And it's led to inflation, too.
Yeah. And, we need that productivity to offset all the money that you just referred that was put into the system. In hindsight, putting that much money in the system as the economy was recovering was not the right idea. What's offset this from getting stagflation has been the productivity boom. That's what we've seen right now. So there's this tension. What are we doing from an investment standpoint? Yeah. You see this in KKR's business. We're much more active in private equity around corporate carve-outs. Been doing those in Japan, the U.S., Europe. That's point number one. Point number two is our infrastructure business is on fire. You want to own more collateral-based cash flows in a world where you want to be long nominal GDP. We're leaving a decade where you wanted to be long financial GDP, where you wanted to get long duration of equities. A lot of money went into venture capital. A lot of money went into long duration bonds. That's not working out so great. What are people doing? They're pivoting back to more upfront yield, owning more assets that actually do well.
Utilities have been on fire lately,
and so all that ties into this idea of being long nominal GDP. And at the same time, we've got a huge surge in demand for energy from AI, and we actually don't have enough energy production, particularly around electricity. And one of the big takeaways from Europe last week is even when we do have the production, it's actually not in the right spots to get to where the demand is. So there's going to be a huge reconfiguration of the energy supply chain. So I heard this morning you guys were talking about NVIDIA. That's the headline number. But really, the most interesting part from KKR's perspective is all the infrastructure that's going to be required to really make that electricity get to where the AI demand.
More power and the grid.
Absolutely.